Wow, looks like someone's been doing their homework. You've sent us a ton of material on ESG and sustainability, everything from academic papers to news articles, even your own notes.
Impressive.
So get ready, because today we're going deep.
We are going to unpack all of this and help you connect the dots.
Yeah, uncover some of those hidden gems in all of this material that you've sent us.
Absolutely.
I'm seeing everything here. We've got carbon footprint calculations, the history of green bonds, even some deep analysis of ESG rating methodologies. I'm even seeing things like tree structures and the Gini coefficient in here.
Someone's been digging into the stats.
They have been.
What I find fascinating is how all of this really points to a bigger shift. We're not just looking at profits anymore.
Right.
It's about understanding the real-world impact of investments
Yeah.
and how environmental, social, and governance factors, that's the ESG, are all intertwined.
They are all connected, yeah.
Yeah.
So it's not just about feeling good. It's about understanding how these ESG factors can actually affect a company's bottom line.
Absolutely. Yeah. And a key definition that you pulled out from the European Commission really highlights this. Sustainable finance is all about long-term value creation,
Yeah.
not just short-term gains. It's about integrating ESG considerations into every single step of the investment process.
Okay, so let's get into the practical side of all of this.
Yeah.
You've included a lot on regulatory frameworks,
Yeah.
PRI, SFDR, TCFD. It's a whole new language.
Yes.
So what are the need-to-know takeaways for investors?
Well, the UN's Principles for Responsible Investment, the PRI,
Right.
is a great example of the growing commitment to ESG.
Yeah.
It was launched back in 2006.
Okay.
And it's essentially a pledge by investors to incorporate ESG factors into their decisions.
Okay.
And get this, over 5,000 organizations globally have signed on,
Wow.
representing trillions of dollars in assets under management.
So this isn't just a niche movement anymore. This is
Yeah.
becoming mainstream.
Exactly.
Yeah.
Exactly. And then there's the EU's Sustainable Finance Disclosure Regulation, the SFDR.
Yeah.
This one is all about transparency.
Yep.
It requires funds to be categorized based on their sustainability focus,
Okay.
with Article 9 funds being like the most hardcore,
Yeah.
aiming for specific sustainability goals.
Okay.
The idea is to make it easier for investors to compare and choose funds that match their values.
Transparency is key,
Yes,
especially when it comes to avoiding greenwashing,
absolutely.
which I know we're going to get to a little bit later. What about the TCFD? I know that one's all about climate change.
Yeah, the Task Force on Climate-Related Financial Disclosures, or TCFD,
All right.
is all about understanding and managing climate risks. They recommend these specific metrics and targets that companies should be disclosing,
Okay.
making it easier for investors to assess their climate resilience.
So it's about making climate risk an integral part of financial reporting, not just some side note.
Exactly.
And speaking of measuring and reporting, let's dive into those ESG ratings. You've included some really interesting research on how they're calculated, from analyzing corporate sustainability reports to even using alternative data sources, things like satellite imagery to monitor deforestation,
Wow.
or even social media sentiment to gauge public perception.
That's next level stuff.
It is. So with all these different approaches, how reliable are these ratings, really?
That's the million-dollar question.
Yeah,
And your research highlights some of the controversies.
of course.
A major concern is the potential for bias, particularly favoring richer countries that have more resources to report their ESG performance.
Right. It's like grading students on their homework when some have tutors and others don't.
It is.
So how should investors be approaching these ratings? Should we be taking these with a grain of salt?
Definitely.
Yeah.
It's crucial to remember that different providers use different methodologies, which can lead to very different scores
Right.
for the same company.
Right.
One study even found that the correlations between some providers were as low as 0.3.
Wow.
It's almost like comparing apples and oranges.
So doing your own research is more important than ever.
Absolutely.
You can't just blindly trust one single rating.
Look at the underlying data, the methodologies used, and consider multiple ratings to get a more balanced view.
Yeah, you've got to understand the limitations, not just take the number at face value.
Exactly.
Okay, so we've got this complex landscape of ESG ratings.
Yes.
We've got regulatory frameworks popping up.
Yeah.
And it's clear this movement is gaining some serious momentum.
Absolutely.
But how does this translate into actual investment strategies? What can investors like you actually do with this information?
That's what we're going to get into next. How to put this knowledge into action and make informed investment decisions that are aligned with your values.
Okay, sounds good. Stay tuned.
We'll be right back.
We'll be right back for part 2, where we'll dive deeper into the world of sustainable investing strategies and explore the booming market for ESG funds. All right, welcome back. So far, we've laid the groundwork, exploring the ins and outs of ESG and sustainability.
Right.
But now comes the exciting part.
Yes.
How to actually put all of this knowledge into action
Absolutely.
and make those informed investment decisions.
Yeah, you've got a mountain of information here on all the different sustainable investing strategies.
Yeah.
Let's break down some of the key ones.
Yeah, let's do it.
Starting with ESG integration.
Okay.
It's about looking beyond just the financial numbers and considering how ESG factors might impact a company's long-term performance.
So instead of just looking at profits, you're also considering things like a company's environmental impact or how it treats its employees.
Exactly.
Yeah.
So, for example, imagine a clothing company that relies heavily on overseas labor.
Right.
ESG integration would mean looking into their supply chain, checking for things like fair wages, safe working conditions.
Right.
Those factors can have a real impact on brand reputation and ultimately profitability.
It makes sense. Consumers are becoming more aware and demanding more transparency.
Oh, yeah.
Bad press about unethical practices can really hurt a company these days.
Absolutely.
What other strategies do you find interesting in the research?
Well, exclusionary screening is a pretty straightforward one.
Yeah.
It's about drawing a line in the sand and saying, I won't invest in companies involved in certain activities,
Right.
whether it's fossil fuels, weapons manufacturing, or gambling.
Okay.
You're really lining your investments with your values.
Yeah, that seems like a simple but powerful way to make a statement.
Yes.
You're putting your money where your mouth is, so to speak.
Exactly. Then we have impact investing, which takes it a step further.
Okay.
It's not just about avoiding harm.
Right.
It's about actively seeking out investments
Mm-hmm.
that generate a positive social or environmental impact alongside a financial return.
So you're not just trying to minimize negative impacts, you're actually trying to make the world a better place with your investments.
You got it. So imagine investing in a company that's developing renewable energy solutions
Right.
or providing clean water access in developing countries. You're potentially making a real difference while still aiming for a financial return.
Right. And, you highlight in your research how the UN Sustainable Development Goals, the SDGs,
Yes.
are becoming a framework for impact investors.
They are.
The SDGs, those are the 17 goals adopted by the UN to address those global challenges.
Yeah.
Like everything from ending poverty to combating climate change.
Exactly. Investors are using them as a guide,
Okay.
identifying areas where their capital can contribute to achieving those goals.
Mm-hmm.
It's a way to connect your portfolio with the big picture.
It's like having a roadmap for making a positive impact on the world
Absolutely.
with your investments. Now let's talk about the market for ESG funds.
Yes.
From what I've gathered, it seems like it's exploding.
It is. It absolutely is.
The growth of ESG-focused investment products is astounding.
Yes. Take Article 8 and 9 funds under the SFDR framework.
Right, which we talked about earlier.
Exactly. They've seen massive inflows in recent years.
You even included a list of some of the largest Article 8 funds out there. I mean, some pretty big names are in the game.
You see BlackRock, Amundi, DWS,
Yep.
all the major players offering ESG-focused funds.
Yeah, and it's not just traditional stocks and bonds. It's expanding into alternative assets, too.
Absolutely.
Like green bonds. I know they've been getting a lot of buzz lately.
Yes, the green bond market has surpassed $1 trillion in outstanding issuance.
Wow.
And your research suggests that it's still growing rapidly. It's clear that investors are hungry for these opportunities to support environmentally friendly projects.
Yeah, it's fascinating how investor demand is really driving this shift
It is.
towards more sustainable options. Speaking of green bonds, you also mentioned social bonds and even something called blue bonds.
Yes.
What are those all about?
Well, think of them as cousins to green bonds. They all use debt financing to raise capital, but they target different areas. Social bonds focus on projects with positive social outcomes, like affordable housing or access to healthcare.
It's amazing how this model of using bonds to finance these specific projects
Yeah.
is being applied to address a whole range of social and environmental challenges.
Absolutely. And then we have blue bonds, which are a relatively new type of bond
Okay.
focused on ocean conservation and sustainable use of marine resources.
Hmm.
Think of things like protecting coral reefs,
Right.
developing sustainable fisheries, or reducing plastic pollution.
Blue bonds, that's a new one for me. I've got to admit, I haven't given much thought to investing in ocean conservation before.
Well, it's a growing area, and your research highlighted how crucial a healthy ocean is for the entire planet.
Yeah.
It's about recognizing that everything is connected, from the air we breathe to the food we eat.
It is all connected.
Yes.
Okay, so we've got green bonds, social bonds, blue bonds. It seems like there's a bond for every cause these days.
There is. There is.
But with all this talk about impact, how do we actually measure whether these investments are making a difference?
That's the challenge, right? It's easy to talk about impact,
It is.
but how do you actually quantify it?
Right.
There are frameworks like the GINs, the Global Impact Investing Network,
Okay.
which emphasizes the importance of setting clear impact goals from the outset
Okay.
and tracking progress against those goals.
Okay. So it's not just about hoping for good outcomes. It's about intentionally designing investments to create positive change
Yes.
and then rigorously measuring the results.
Exactly. And another framework that your research highlighted is the intentionality, additionality, measurability framework.
Oh my goodness, say that 3 times fast.
I know, right?
Okay, what does that one focus on?
Well, this one really focuses on ensuring that the investment is truly making a difference,
Okay.
above and beyond what would have happened anyway.
So it's about proving that the investment had a real measurable impact, not just taking credit for something that would have happened regardless.
Exactly, like proving cause and effect.
Right, right. And, you included some pretty sobering statistics from the 2023 SDG Progress Report,
Yes,
suggesting that despite progress in some areas, we're falling short on a lot of the goals,
we are.
which is a stark reminder that there's still a long way to go
Yes.
and that directing capital towards these sustainable solutions is more urgent than ever.
Absolutely. And this brings us back to the issue of greenwashing,
Right.
which you highlighted extensively in your research.
I did.
It's about separating those genuine efforts from those empty promises.
Yeah, greenwashing, that's where companies try to make themselves look more environmentally friendly than they actually are.
Exactly.
Like slapping a green label on a product without making any real changes.
Absolutely. And your research highlighted some pretty alarming statistics
Yeah.
on the prevalence of greenwashing incidents across various sectors.
It seems like no industry is immune.
It seems that way.
From banks to food companies to even airlines, everyone's trying to jump on that ESG bandwagon.
They are. They are.
But how can investors actually spot greenwashing and avoid falling for these misleading claims?
Well, that's where due diligence and critical thinking come in.
Okay.
Look beyond that flashy marketing
Right.
and dig deeper into a company's track record,
Yeah.
their actual practices. Does their walk match their talk?
Right. So don't just take their word for it. Do your homework.
Yes.
Look for that evidence to back up their sustainability claims.
Exactly. Look for third-party certifications from reputable organizations.
Right.
Examine their sustainability reports.
Okay.
And look for consistency in their messaging.
Yeah.
Look for those specific, measurable targets, not just vague promises.
It seems like transparency is key here.
Oh,
The
absolutely.
more information a company is willing to share, the better.
Absolutely. Transparency builds trust
Right.
and allows investors to make more informed decisions.
Okay, so speaking of informed decisions, let's shift gears a little bit and talk about the concept of active ownership. I've seen a lot about that in the materials I've seen, particularly around shareholder engagement
Yes.
and proxy voting. It sounds like it's about using your power as an investor to actually influence corporate behavior.
You got it.
Active ownership means using your rights as a shareholder to engage with companies
Yes.
and promote those sustainable practices.
Yeah.
It can involve direct dialogue with management, submitting shareholder proposals,
Yeah.
or voting on resolutions at annual general meetings.
Absolutely.
So it's about taking a proactive approach, not just sitting back and hoping that companies will do the right thing on their own.
Exactly. And your research highlighted some fascinating trends
Yeah.
in ESG-related shareholder proposals. We're seeing a shift from focusing solely on governance issues, like board diversity, to proposals addressing environmental and social concerns,
Okay.
like climate change policies or human rights practices.
So it's like investors are realizing they have a voice
Yes.
and they're using it to push for change
They are?
on a broader range of issues.
Absolutely. And there's growing evidence that these engagements are actually having an impact.
Okay.
Companies are becoming more responsive to ESG concerns, whether it's due to investor pressure or just the realization that sustainability is simply good business.
You even included a pretty compelling example.
Yes.
Shareholders of a major energy company voting to demand a transition plan aligned with the Paris Agreement.
That was big.
That's huge.
Really huge.
It shows that collective action can actually move the needle
It can.
and force companies to take meaningful steps towards sustainability.
It can.
And speaking of collective action, let's talk about the role of institutional investors in driving ESG adoption.
Yes.
I'm seeing more and more news about big pension funds and asset managers incorporating ESG factors into their investment decisions.
They are.
Why are they getting on board?
Well, they're often long-term investors,
Right.
managing funds for millions of people.
Right.
So they're realizing that ESG issues like climate change or social inequality can have a significant impact on long-term returns.
Right. Makes sense.
Also, they're facing growing pressure from their own beneficiaries
Okay.
to consider the broader impact of their investments.
So it's not just about doing good, it's about fulfilling their fiduciary duty
Exactly.
to act in the best interests of their clients.
Yes.
And those clients are demanding action on ESG.
They are. And then there's the growing body of research suggesting that companies with strong ESG profiles may actually outperform their peers in the long run.
Really? So there's a potential financial upside to being sustainable.
That's what the research suggests.
Interesting.
Of course, the relationship between ESG and financial performance is complex,
Right.
and there's still debate on the exact nature of the link,
Of course.
but there's a growing consensus that ESG factors can't be ignored.
Right. It seems like the days of viewing sustainability as simply a cost center are over.
They are.
Investors are recognizing that it can actually be a driver of value creation.
Absolutely.
And this brings us to the interesting topic of how ESG factors can impact a company's cost of capital. You included some research suggesting that companies with good ESG ratings might actually benefit from lower borrowing costs.
That's right.
That's intriguing. How does that work?
Well, investors are increasingly factoring ESG risks and opportunities into their investment decisions.
Okay.
Companies with strong ESG profiles are often seen as less risky
Makes sense.
and therefore more attractive to lenders and investors.
Right.
And this can translate into more favorable lending terms and lower interest rates.
So being good can actually save you money.
In a way, yes.
Oh, that's a good takeaway.
And there's even a concept called the ESG efficient frontier,
Okay.
which suggests that incorporating ESG factors into portfolio optimization can potentially lead to both better financial returns and a more positive impact on the world.
So it's like finding that sweet spot where financial performance and sustainability goals align.
Exactly.
Okay, now let's zoom out a bit and talk about the role of ESG in a specific area, sovereign debt. You included some fascinating research on how ESG analysis is being applied to countries, not just companies.
That's right.
So it's not just about evaluating the sustainability of individual companies,
No.
but also assessing the practices of entire nations.
Exactly. Investors are looking at factors like environmental policies,
Right.
social stability, and governance standards when they're making decisions about investing in a country's debt.
So if a country has a poor track record on human rights or is highly vulnerable to climate change,
Yeah.
investors might demand a higher return to compensate for that risk.
That's the idea.
Makes sense.
And your research highlighted some key ESG variables that are particularly relevant
Okay.
for sovereign bond analysis.
Okay.
For example, in the environmental category, factors like climate change vulnerability
Right.
and exposure to natural disasters were found to be really significant.
Well, yeah, if a country is constantly facing climate-related risks, it could impact its economic stability and ability to repay its debts.
Exactly. And in the social category, variables like human rights performance, education levels, and healthcare access were also important. Countries with strong social outcomes are often seen as more stable
Yeah.
and attractive to investors.
So it seems like ESG analysis is becoming more holistic,
Yes.
recognizing the interconnectedness of environmental, social, and governance factors at all levels.
It is, and it's driving a shift towards a more integrated approach to sustainable investing,
Yeah.
where investors consider the impact of their decisions on both financial returns and the well-being of the planet and its people.
Absolutely. Wow. We've covered so much ground in this part of our deep dive.
We have?
From exploring different sustainable investing strategies
Yes.
to understanding the booming market for ESG funds and bonds.
We did.
We've even touched on the complexities of measuring impact, the dangers of greenwashing,
Yes.
and the power of active ownership.
Yeah, you've done a fantastic job of synthesizing this information
Well, thank you.
and connecting the dots between all the different concepts.
I'm trying.
It's clear that you're really starting to grasp the nuances of ESG
Well, I'm learning a lot from you.
and how it's transforming the investment landscape.
It is a rapidly evolving landscape,
It is.
but there's still more to explore.
There is.
In the final part of our deep dive, we're going to delve into the fascinating world of biodiversity
Yes.
and its growing relevance for investors. Welcome back, all right, for the final stretch of our ESG deep dive.
The final stretch.
We've covered a lot of ground,
A lot.
but there's one more crucial piece of the puzzle we need to explore.
Yes.
And you sent us a ton of material on this.
Yeah.
Biodiversity. It seems like it's becoming a bigger part of the conversation.
It absolutely is. For a long time, biodiversity was really the overlooked element of ESG,
Right.
but investors are waking up
Yeah.
to its importance.
Yeah.
It's about recognizing the interconnectedness of all living things
Right.
and the essential role that nature plays in supporting human life and the economy.
Okay, so back to basics for a second. What exactly does biodiversity mean in this context? I mean, it's about more than just saving the rainforests, right?
Right. Biodiversity encompasses the incredible variety of life on Earth, from the tiniest microorganisms to the largest whales.
Right.
It's about the diversity within species, the different ecosystems they inhabit,
Right.
and the complex interactions between them.
Yeah.
And, your research highlights a crucial point here.
Okay.
A decline in biodiversity can have ripple effects throughout the entire ecosystem, impacting everything from food security to clean water, even to climate regulation.
So it's not just an environmental issue.
No.
It's an economic issue.
Yes.
It's a social issue.
It's all connected.
It's connected to everything.
Yeah. Your research highlighted a pretty striking example,
Okay.
the decline of pollinators,
Okay.
like bees and butterflies.
Right.
They're essential for the reproduction of many crops,
Right.
but their populations are declining
Yeah.
due to habitat loss and pesticide use.
Right.
And without them, we face a real threat to global food production.
That's a scary thought.
It is.
It really hits home how much we rely on a healthy, functioning ecosystem.
We do.
So how does all of this translate to the world of investing? How can investors actually address biodiversity loss through their portfolios?
Well, there are different approaches. One is negative screening,
Mm-hmm.
avoiding companies that are directly contributing to biodiversity loss,
Right.
like those involved in deforestation or unsustainable fishing practices.
So you draw a line in the sand and
Yeah.
say, I won't support companies that are harming the planet.
Exactly. And then there's the positive side,
Hmm.
Actively seeking out companies
Yeah.
that are developing solutions to protect and restore biodiversity.
Right.
Think about companies working on sustainable agriculture practices,
Right.
reforestation efforts, or even developing technologies to monitor ecosystems.
So you're not just avoiding harm, you're looking for those companies that are part of the solution.
Exactly. And some investors are going even further, looking at the overall impact of their portfolios on biodiversity.
Okay. How do they do that?
Well, they're analyzing where their investments are geographically located,
Okay.
considering whether they're contributing to habitat loss
Right.
or impacting those sensitive ecosystems.
So it's about recognizing every investment has a footprint,
It does.
and that footprint extends beyond just carbon emissions.
Absolutely. But measuring and managing biodiversity impact can be tricky.
Right.
Unlike carbon emissions, which are relatively straightforward to quantify,
Yeah.
biodiversity is much more complex.
Right. You sent me some information on the IUCN Red List,
Yes.
which seems to be a key tool for assessing biodiversity. Can you explain how it works?
Yeah, the IUCN Red List is like a global barometer for the health of species. Scientists assess the risk of extinction for thousands of species,
Wow.
categorizing them from least concern to critically endangered. Investors can use this information to understand which regions and industries pose the greatest threats to biodiversity.
So it's like a warning system,
It is.
highlighting areas where investment needs to be carefully considered.
Exactly. And there are other initiatives emerging to help investors navigate this complex landscape.
Okay.
One that you included in your research is the Task Force on Nature-Related Financial Disclosures, or TNFD.
Yes, the TNFD. I've been hearing a lot about that lately. What's their role?
Well, the TNFD is developing a framework for companies to assess and disclose their risks and opportunities related to nature.
Okay.
It's similar to the TCFD for climate change,
Right.
but it takes a broader view, considering the full range of nature-related impacts, including biodiversity loss.
So it's about making nature a core part of corporate reporting.
Yes.
And financial decision-making.
Exactly. And it's a recognition that just like climate change,
Yeah.
biodiversity loss poses a significant financial risk to companies and investors.
It does. This has been an incredible journey
It has
through the world of ESG and sustainable investing.
a lot of information.
We've covered so much,
Yeah.
from those basic principles and frameworks to the nuts and bolts of ESG ratings.
and investing strategies.
Yeah.
We've even explored those challenges of greenwashing,
Oh, have.
the power of active ownership,
Yes.
and even the growing importance of biodiversity.
A lot.
It's amazing.
It is. It's clear that you've done your homework
I've tried.
and are really starting to grasp the complexities
I'm getting there.
of this rapidly evolving landscape.
Well, thank you. I feel like I've gained a whole new perspective on investing and the power it has to shape a more sustainable future.
And that's what it's all about.
It is.
Recognizing that our investment choices have consequences
They do.
and that we have a responsibility to use our capital wisely, not just for financial gain, but for the well-being of our planet and future generations.
Absolutely. So as we wrap up here,
Yes.
any final words of wisdom for our listeners as they continue on their ESG journey? As you continue your ESG journey, just remember to ask yourself, how can I use my investments to create a world where both people and nature can thrive? That's the real power of sustainable investing.
Well said.
Thank you.
That is all the time we have for today's deep dive.
Thanks for having me.
But this is just the beginning of your journey.
It is.
Keep learning, keep exploring, and keep making those informed investment decisions that align with your values.
Absolutely. And thanks for listening, everyone.